I'm now joined by economist Laurie Laird. Laurie, great to have you on the show. Hiya. So investors with shares in Nvidia must be having a great day after those blowout quarterly results. What is driving the company's first acceleration in 7 quarters?
Well, I think they are having a great day, but one of the reasons they're having a great day, Leigh-Ann, is it looks like a lot of them have started to take profits today after that run-up in shares that you mentioned in your introductory comments. Nvidia started the day up about 4%. And we're now down to just a little bit over break even on the day. So it looks like a lot of people took that run up, said, hey, wait a second, these are amazing results. Can we ever replicate these results? Let's maybe all the good news is there. Let's take our profits. We're seeing the same thing with AMD, which is one of the smaller competitors to Nvidia. Intel is still up on the day, up about 1.5%, but Intel's a little bit of an also-ran when it comes to these big chip makers. But it's quite striking because Nvidia's results were so unbelievably good. So to see us break even on the day, and we've been ebbing throughout the day, I wouldn't be surprised to see Nvidia close actually lower on the day, despite results that absolutely blew everyone's minds. And as to your original question, what's driving this? It's exactly as Jensen Huang said, demand is just off the charts. And it's not just for the real high-end stuff that's powering these AI centers, the Blackwell chips, that's the highest end chip for NVIDIA. But every chip along the sort of the hierarchy of what NVIDIA makes did incredibly well, even down to the low-tech gaming chips. And you'll remember that NVIDIA, that's how NVIDIA got its start, making these graphic chips for gamers. Sales of those, and they're lower margin than these AI chips, but sales of those had sort of petered out a little bit while NVIDIA was focusing on the high-end stuff, the higher margin stuff. But sales of those did very, very well in the latest quarter as well. So everything that NVIDIA makes is flying off the shelves. And I think crucially, NVIDIA seems at the moment to be able to keep up with demand.
And I think it's a big question. Demand is a big question, and we'll get to that. But really, Laurie, bullish spirit off the back of Nvidia's earnings has lifted tech stocks globally. But the big question is, have these results tempered all those fears over a potential AI bubble? I feel like we've been talking about this bubble for a little while.
And Leigh-Ann, we're going to be talking about this for a little bit longer, so let's settle in with this one. I think this is a conversation you and I will be having for a while. Last night, no bubble was the story. Bubble off was the story after these NVIDIA results. And in after-hours trading, NVIDIA shares were up as much as 6%. Today, we're back to, so 12 hours later, we're back to bubble on story. People are having trouble kind of picking through these results. And there are two potential problems here. One is this a bubble? And there are a lot of comparisons made with the early 1990s and the dot-com bubble and you know, what a disaster that was when that crashed. And the problem with the dot-com bubble is a lot of companies, as is happening now, put a lot of investment into infrastructure to build cable lines under the sea so that we could all use the internet. A lot of companies went bust. We are now using that infrastructure, but we didn't use it all as it was coming online, and that was the problem. That was what led to the bubble bursting. Could that happen right now? Absolutely possible. I don't think anyone who tells you they have a sense of how we will be using AI, how much AI we will be using, anyone who tells you they have a grip on that, I think is probably exaggerating a little bit. It's impossible to forecast how we will be using this stuff, how much of this stuff we will be using in the near term and over the longer term. So that's a big question. So bubble on, bubble off, it really varies from day to day.
Yeah, absolutely. And I do think we'll be talking about it for a long time. And I also want to talk to you about, after the US government shutdown ends, the long-awaited jobs data has finally come. Unemployment reaches its highest level, actually, in 4 years. And my big question here is this going to worry the Federal Reserve?
I think that far too much is being made out of that rise in unemployment to 4.4% from 4.3%. This is September data, and a couple of Fed officials who were speaking about it today have called it stale. That's the word of the day. Well, stale and bubble, two words of the day. But I think that there's too much being made of that. That unemployment rate comes from what's called the household survey. And it's when investigators from the Bureau of Labor Statistics knock on doors and say, hello, Leigh-Ann, are you employed? Are the people in your household employed? And that's how they come up with this number. It's not accurate. People aren't answering their doors the way that they did. This face-to-face survey data is giving us quite cloudy results. The establishment survey, and that's count how many people are working or not working, how many jobs were created or lost in any given month. That comes from companies. It's electronically submitted, and it's considered to be a lot more accurate. That showed job growth of 119,000. That's just way above what anybody was looking for. Highest estimate I saw was up 50,000. And I think that's the number that the Fed will be looking at. We're talking a lot about that unemployment rate. I think that's the less important number.
Laurie Laird, stale and bubble. What a conversation. Always good to have you on the show. Thank you so much for joining me.